biggest ever revision to jobs numbers shows weakened market. And trust me, you'll want to stick with me on this one because what just came out could easily change the way we look at the entire economy of the past year. And yes, it's big, record-breaking big. So here's the headline. The government has issued its latest update on the labor market, and brace yourself, because the numbers we thought we knew? Not so accurate. In fact, job growth was a lot weaker than originally reported. How much weaker? Try nearly 1 million jobs weaker. To be exact, 911,000 fewer jobs were created between April 2024 and March 2025. That makes this the largest preliminary revision in the history of these reports. Now, every year the Bureau of Labor Statistics does this checkup. It's routine. They go back, look at tax filings, and clean up the early estimates. Usually the changes are a little here, a little there. But this time, it's like expecting a drizzle and suddenly getting hit with a thunderstorm. Instead of minor tweaks, we're seeing an average cut of about 76,000 jobs per month over that 12-month stretch. That's not a typo. And let's be clear about the timeline. Most of this period fell under the Biden administration, with just 3 months landing in the Trump era. Politics aside, what the data shows is that some key sectors were hit hardest. Trade, transportation, and utilities, down by about 226,000 jobs. Leisure and hospitality, along with professional business services, also looking at six-figure losses compared to what we thought was true. In other words, jobs we thought existed didn't. So, why the big drop? Well, those initial reports are based on surveys, basically businesses saying, here's how many people we think we hired. Turns out some of those numbers were a little too optimistic. New companies didn't create as many jobs as they hoped, and early sampling errors played a role. When the government compared the survey guesses with actual quarterly tax filings, the more precise data revealed the truth. And one more thing. These reports don't count undocumented workers, since they're not filing official payroll taxes. So what you see is really the picture based only on documented employment. Economists are now raising eyebrows, because nearly 1 million missing jobs isn't something you just shrug off. And remember, back in July, President Trump already voiced frustration with a different jobs report, accusing, without evidence, the former BLS commissioner of skewing the data. He even fired her after revisions shaved off about 250,000 jobs. Fast forward to today, and we're staring at an even steeper downward adjustment, with an acting commissioner now running the show. The permanent nominee hasn't been confirmed yet, which makes this all the more politically charged. Here's the catch. While these numbers are serious, they are also backward-looking. They cover the 12 months ending in March, not the more recent summer months. Still, the revisions highlight how fluid labor market data can be. What looks strong in the moment can later be revised down dramatically once more detailed information comes in. And if you're wondering what happens next, well, this isn't even the final word. This is the preliminary revision. The Bureau of Labor Statistics will issue a final revision in February of next year, so today's number could still move again. Think of it like waiting for the director's cut of a movie, except in this case, the plot twist could add or subtract hundreds of thousands of jobs. So, where does that leave us? With a weaker year than we thought, a White House that's sure to react, and economists debating whether initial labor reports are reliable enough if they shift this dramatically later on. For now, though, one thing is certain. This revision is the biggest on record, and it sends a clear signal that the job market wasn't as strong as we believed. Stay tuned, because if history is any guide, this story is far from over.